Hello everyone and welcome to Financial Accounting. Our topic today is the accounting cycle, reporting financial results. We will look at the adjusted trial balance, learn how to close temporary accounts, and prepare the income statement, the statement of retained earnings, and the balance sheet. Let's look at the adjusted trial balance to see how we can use it to prepare the income statement. Here is the adjusted trial balance for JJ's Lawn Care at May 31st. We will use this adjusted trial balance to prepare the financial statements. The first financial statement to prepare is the income statement. It is prepared first because we need to know the amount of net income to be reported in the statement of retained earnings. First, we need to identify all revenue and expense accounts that go on the income statement. In our example, it is 1 revenue and 3 expense accounts. The difference between revenue and expenses is $400. This is our net income. Here is JJ's income statement for the months ending May 31st. JJ's has produced net income of $400. Revenues total $750. Expenses include gasoline expense and depreciation on the company's equipment and truck. When preparing financial statements, we always begin with the income because net income is a part of the statement of retained earnings. Once the income statement is completed, the statement of retained earnings can be prepared. The statement of retained earnings summarizes the increases and decreases in retained earnings during the period. Remember that net income increases retained earnings. Dividends and net losses decrease retained earnings. Retained earnings is that portion of stockholders' equity created by earning net income and retaining the related resources in the business. The statement of retained earnings summarizes the increases and decreases in retained earnings from business operations during the period. JJ's Lawn Care was started in May, so the beginning balance in retained earnings was 0. We add net income of $400 to the beginning balance of 0 and subtract the dividends paid of $200 to arrive at the ending retained earnings balance of $200. Retained earnings at May 31st will appear on the balance sheet of JJ's Lawn Care. Before we move on to preparing the balance sheet, let's look again at the accounting equation. Assets equal liabilities plus owner's equity. You will see assets, liabilities, and owner's equity sections on the balance sheet. The balance sheet lists the amounts of the company's assets, liabilities, and owner's equity at the end of the accounting period. The balances of the assets and liabilities accounts are taken directly from the adjusted trial balance. The amounts of retained earnings at the end of the period is taken from the statement of retained earnings we just prepared. Note that the Contra-Asset accounts, accumulated depreciation tools and equipment, and accumulated depreciation truck reduce the balance in the related asset accounts. As we can see on this slide, net income impacts the retained earnings of the company. The ending balance of retained earnings appears on the balance sheet. Now it's clear to see how all the financial statements are integrated. In addition to the basic financial statements, accountants must prepare notes to the financial statements. The purpose of the notes is to explain certain items or transactions to the reader. There is no comprehensive list of all information that should be disclosed in financial statements. The adequacy of disclosure is based on a combination of official rules, tradition, and accountants' professional judgment. Two items always disclosed in the notes to financial statements are the accounting methods in use and the due dates of major liabilities. So, for example, JJ's Lawn Care would disclose that straight-line depreciation was used to determine depreciation expense. The notes also explain any unusual or infrequent items that may be of interest to the reader. Almost all major corporations have a note disclosure about pending litigations. Once the financial statements have been prepared, the books are closed and it's time to get ready for the next accounting period. Net income is earned over a period of time. At the start of a new period, we want all revenue and expense accounts to have a zero balance, so we can start recording income in the period. The closing of company's books is a four-step process. Step 1 is to close all revenue accounts to a temporary account called income summary. Step 2 is to close all expenses accounts to the income summary account. At this point, net income is isolated in the income summary. Step 3 is to close income summary to retained earnings. Net income transfers from income summary to retained earnings and zeroes out income summary. The income summary account never appears in the financial statements. The fourth and final step is to close dividends to retained earnings. Net income is added to retained earnings and dividend is subtracted from retained earnings. This updates retained earnings. All of the accounts that must be closed for JJ's Lawn Care service are highlighted on the adjusted trial balance shown here: dividends, sales, revenue, and the three expense accounts. When the closing process is complete, the retained earnings account will have the proper balance. Notice that there is no retained earnings account because the company was started in May. Before we move on to closing revenue and expense accounts, let's look at the T accounts for revenue and expenses. In terms of T accounts, all expenses are on the left or debit side of the expenses T account, and the sales revenue is on the right or credit side of the revenue T account. Sales revenue has a credit balance, so to close the account, it must be debited for its current balance and credited to income summary. The closing entry for revenues is to debit the revenue account, sales revenue, for its balance of $750 and credit income summary for the same amount. Let's look at the ledger accounts to see what we have accomplished with this entry. Notice that the balance in the sales revenue account is zero. We can now start accumulating revenue for the next accounting period, the month of June. Income summary has a credit balance of $750. The total revenues have been transferred to the credit side of income summary. And now let's close the three expenses. Expense accounts have a debit balance. The account is closed by credit to the expense account and the debit to income summary. A credit is made to each of the three expense accounts for their balances, with a debit to income summary for the total of $350. Let's look at the ledger accounts after making the second closing entry. After we credit the expense accounts, each expense account has a zero balance. Now the expense accounts are ready to begin recording expenses incurred during the month of June. Income summary is debited for $350 and now has a credit balance of $400. This $400 represents the net income for the month of May. Next, net income must be transferred from income summary to retained earnings. Income summary has a credit balance of $400. To close this account, income summary must be debited for $400 and a credit must be made to retained earnings for that amount. Let's look at the ledger account balances. Income summary now has a zero balance, and net income appears on the credit side of retained earnings. Remember, credits to retained earnings increase the account balance. The final closing entry deals with dividends. The dividends account has a debit balance. To close this account, a credit is made to the dividends account and debit to retained earnings. Our final closing entry transfers the amount of dividends to the retained earnings account. Let's look at the ledger account balances. After we post the closing entry, the dividends account has a zero balance. Retained earnings now has a credit balance of $200. This is the ending balance of retained earnings and is the amount that appears on the balance sheet for J&J's Lawn Care. After preparing all the closing entries, an after closing trial balance is prepared. Here is the after closing trial balance for J&J's Lawn Care Services. The after closing trial balance shows we have no revenues, expenses, or dividends. The proper balance of retained earnings appears on the after closing trial balance. If there are any revenues, expenses, or dividends on the after closing trial balance, an error has been made and the closing entries must be reviewed. That's all for today. Thank you for watching this video. Don't forget to like and subscribe. More videos are coming soon.